Good morning and a happy Wednesday. Welcome to today's episode of Morning Well. Three things that we will talk about: tech pullback, pharma companies pledge to avoid testing shortcuts, and no end to the Brexit drama. Big technology stocks fell Tuesday for the third consecutive trading session, sparked by growing concerns that some of the stocks seen as beneficiaries of the pandemic have climbed too far too quickly. The losses pulled Nasdaq Composite into correction territory, a drop of 10% from a recent high, just 3 sessions after setting a record close on Wednesday. So that's the fastest ever such fall. Index was down 4.1% on Tuesday, extending its losses over the past 3 sessions to 10.03%. Gold wavered but closed flat. The dollar rose, treasury yields slid by about 3.9 basis points to 0.68%. Asian equity futures are also in the red. Among the biggest decliners were Apple, Amazon, Facebook and Zoom Video. All of them were down more than 4%. But despite their recent losses, the stocks are still up more than 30% for the year. The S&P 500 was also down 2.8%. The Dow was down 2.2%. In fact, all the sectors were down, even financials, energy, the cyclical names were also down yesterday, along with the information technology sector. Brent crude tumbled below 40 for the first time since June. WTI plunged about 7.6% also, as stalling consumption recovery in Asia and increased supply from OPEC Plus signaled a bleak short-term outlook. Remember, yesterday we touched upon the fact that Saudi Arabia signaled an expectation of reduced demand from Asia and hence cut their Asia crude prices. Technical indicators are also pointing to further selling pressure. Brent is flirting with its 100-day moving average and is threatening to drop below for the first time since mid-June. On the back of this, energy stocks took a beating. The worst performing stocks in the S&P 500 were Apache, which was down about 11%, and Devon Energy, which was down about 8.8%. Tesla, another one of this year's high flyers, had its worst day ever, down about 21%. S&P Dow Jones indices late Friday passed over the electric car maker for inclusion in the S&P 500, which many investors had thought would give the shares another lift. So these shares have fallen about 34% in September, but they have roughly quadrupled in 2020. Bucking this downward trend was the shares of General Motors, which is up about 7.9% after it formed a strategic partnership with battery and hydrogen-powered vehicle maker Nikola to jointly develop an electric truck. So Nikola shares were up about 41% on this news. Among other individual stock moves, thing to note was Boeing was down about 5.8% after Wall Street Journal reported federal safety regulators were reviewing production of the 787 Dreamliner. So another one of the models in trouble. Fitness company Peloton Interactive was up about 6.2% after unveiling new bikes and lower prices, trying to capitalize on more home workouts. Sticking with other earnings, Lululemon sales and EPS beat as consumers bought more comfy yoga pants online. While the CEO said he's cautiously optimistic about the rest of the year, they are not giving a detailed forecast. Shares dropped in late trading. Slack's quarterly billings fell short of estimates, signaling its dependence on virus hit small and medium businesses and sending the stock down about 15%. Latest on the virus news, 9 pharma companies pledged to avoid testing shortcuts, hoping to soothe concerns that political pressure to speed up a vaccine may compromise its safety. Moderna fell 13% on the news. AstraZeneca's ADRs dropped post-market after Stats said its vaccine study was put on hold due to a participant's suspected adverse reaction. Boris Johnson, in the meantime, banned gatherings of more than 6 people. India will begin a third phase trial of the Oxford shot candidate next week, and researchers in China found the virus may be infectious on chilled salmon for more than a week. So overall, not very good developments on the virus front. Elsewhere, the Shanghai Composite was up about 0.7%, while other major benchmarks in Asia climbed yesterday. In Europe, the pan-continental Euro 600 was down 1.1% as another round of Brexit trade negotiations between UK and EU are set to begin. More on that in the FX section. The worst performing currency today was the sterling. EU and UK Brexit talks headed in the wrong direction after Prime Minister Johnson threatened to walk away from the Brexit negotiations if EU does not budge on its demand. Internal frustrations is rapid as the UK government's top lawyer quit over Brexit withdrawal disagreements. According to Germany Scholz, the latest signals from London do not raise hopes for a Brexit deal, and a disorderly Brexit would be a real disaster for Britain. The same could be said for EU as well, but UK would most certainly bear the brunt of the pain. On the euro, we'll be looking out for the ECB rate decision coming out tomorrow. German industrial production in the meantime weakened while trade activity improved, but that was due to lower exports. The ECB will be worried that the Eurozone recovery is losing momentum and virus cases are also on the rise. So an important event to watch out for tomorrow. That's the update. Stay safe and healthy, everyone.